See, today we have to start our discussion on center-state financial relations. So, center-state relations has undergone almost a complete change after the So, with the coming up of the GST, inclusion of this particular economic reform, and when since we have implemented this, the relationship between the financial relationship between the union and the states, they have now been completely altered. So basically, in this aspect of our discussion of financial relations, we have to see 2 or 3 basic ideas. First of all, we are going to start with the constitutional provisions, and we are going to look at what the constitution dictates. Second of all, we are going to talk about the problems. What are the problems in this relationship? And when we are discussing the constitutional provisions, we are also going to look at GST, and not in terms of, obviously not in financial terms, not in economic terms, rather more in political terms, and we are going to see how GST has affected fiscal federalism. That means, is it a challenge to fiscal federalism, or it is an example of cooperative federalism? Clear? So this is the part of our discussion. Now this is what we need to see when we talk about the financial relations. Let's first start with the constitutional provisions. Let's look at what does the constitution dictate. What does the constitution dictate with respect to the legislative, the financial relation between the center and state. Let's start with that. Let's start with constitutional provisions. First is Article 268. Article 268. It deals with duties levied by the union, but collected and appropriated by the states. Collected and appropriated by the states. Who levies it is what is this idea, whether it is union who levies the tax or whether it is the state who levies the tax. Depending upon this, we need to see whether it is mentioned in the union list or the state list. If the tax is being levied by the union, which means it is mentioned in the union list. If the tax is being levied by the state, it is mentioned in the state list. Clear? So when we say levied by the union but collected and appropriated by the state, it means levied by the union, which means it is the part of union list, collected by the state, which means it is the state administration or administrative machinery that is used, and appropriated by the state means it becomes the part of consolidated fund. Consolidated fund of the state. It becomes the part of consolidated fund of the state. So when I say levied by the union or levied by whichever authority, it means it is mentioned in that list. When I say collected by, which means what is the administrative machinery that is used. So whether administrative machinery of the center or the administrative machinery of the states are being used. And appropriated means whether it is a part of the consolidated fund of India or consolidated fund of the state. If it is mentioned state, appropriated by the state, which means it automatically becomes the part of consolidated fund of the state. If it mentions the union or center, it means it becomes the consolidated, it becomes the part of consolidated fund of India. Clear? So the duties that are levied by the union but are collected and appropriated by the states. What are those duties? You can mention here. Further right, such stamp duties are mentioned in the union list, shall be levied by the government of India but shall be assigned to the states. Clear? So underline stamp duties. See, actually pre-GST there were some other duties which were the part of it. The duties such as excise on medicinal and toiletry preparations, they were basically a part of it, but it has now been excluded from this and now it is the part of GST. So stamp duties are the only duties which are left under Article 368. It is levied by the union because it is the part of union list, but it is assigned to the state, which means it is collected and appropriated by the state. So it becomes the part of consolidated fund of state. Clear? Next, Article 268A. Article 268A, which dealt with service taxes, has been repealed and subsumed under GST. Has been repealed and subsumed under GST. So previously there was an article 268A. Now this article no more exists. So this idea of service tax, very important. This idea of service tax now, previously it used to be there, now it has been subsumed under GST. Next, Article 269. It deals with taxes that are levied and collected by the union. But are assigned to the states. Levied and collected by the union but are assigned to the states. What does this mean? Where is these taxes mentioned? Union list. Which organization or machinery is used? Administrative machinery is used? Union. But the tax, whatever money is collected, it does not go to the consolidated fund of India, it goes to the consolidated fund of states. Clear? Right? Taxes on the sale and purchase of goods, and taxes on the consignment of goods, in brackets here, right, except those which are subsumed under GST, shall be shall be levied and collected by the union, shall be levied and collected by the union, but are assigned to the states. Now, have you read GST in economics? Have you gone through it? See, GST is an indirect tax, which means indirect tax means what? It is levied on sales and purchase. That means only I will pay those taxes only if I use a certain good or service. Otherwise, I am not going to pay that particular tax. Now, income tax is a direct tax. So, it is directly done what? It is directly imposed on my income. Whereas, being an indirect tax, GST is imposed not on my income, but on those goods and services that I basically use. So, anything that I buy, you will find there is a GST that is imposed on it. Clear? However, under Article 269 of the Constitution, there are some goods that are kept outside. There are some goods which are kept outside the GST. When you go through this particular topic GST, you will find that there are some goods, like when we say crude oil. Now that is kept outside the GST. That has been kept outside the GST. So if you ask for a bill, suppose you go to a petrol pump and ask for a bill, you will find if they impose tax, they are not going to write there GST. That will still be a sales tax. They will mention sales tax. So there are some goods which are kept outside the GST, despite the fact that most of the indirect taxes and they have been subsumed into one GST, but there are some taxes which still is present and they are kept outside. And in those cases which are those taxes which are imposed on sale of goods which are kept outside the GST and on consignment of goods, those are the taxes which are levied by the union, collected by the state union machinery, union administrative machinery, but are assigned to the states, which means it does not become the part of consolidated fund of India, it becomes the part of consolidated fund of the state. Clear? Next, Article 269A. Article 269A, added by the 101st Constitutional Amendment, added by the 101st Constitutional Amendment, it deals with levy and collection, levy and collection, levy and collection of GST, in course of interstate trade or commerce. Interstate trade or commerce. Article 269A clause 1 deals with GST on supplies. GST on supplies of interstate trade or commerce, interstate trade or commerce, which shall be levied and collected, which shall be levied and collected by the government of India, and such taxes shall be appropriated between union and state, union and the states, in the manner as may be provided by the Parliament, by law, on the recommendation of the GST Council. The GST Council. Underline this. Levied and collected by the union, levied and collected by the union, but appropriated between the union and state on a law passed by the parliament on the recommendation of the GST Council. Now, basically what is this? This deals with something called as IGST. What is IGST? Interstate GST. So there, when we talk about GST are basically, there are three types of GST that is levied. First is the CGST, which is center GST. Then there is SGST, which is the state GST. And then there is something called as the IGST, which means interstate GST. So when it comes to interstate trade or commerce, and the GST, or that is the tax that is levied on interstate GST, that is the union government which collects it. It is the union government which levies it. But when it comes to appropriation, that means who will keep the money, it is divided between the union and state. It is divided between the union and state. How is this division takes place? That means who decides what percentage of it goes to the state and what percentage of it goes to the union? It is decided by a law, which is passed by whom? By the parliament. But how is this law passed by the parliament? On the recommendation of the GST Council. Clear? On the recommendation of the GST Council. So interstate trade and commerce that happens, and the IGST that is applicable on it, who collects the money? It is the union who levies and collects the money. But it is not kept solely by the union. It is distributed among the union and states on the recommendation. No, on the recommendation of the GST Council, the manner in which the GST Council provides for. Now, what is GST Council? I am coming to it. Clear? Next. Article 270. Article 270. Taxes that are levied and distributed, taxes that are levied and distributed between the union and state, between the union and states. All other taxes that are referred in the union list, except for those mentioned under 268, 269, 269A, 269A, and surcharges on taxes and duties, surcharges on taxes and duties referred in Article 271, and cess, cess, levied for a specific purpose, under any law made by the parliament, shall be distributed between the union and state, on the recommendation of the Finance Commission, on the recommendation of the Finance Commission, which is constituted by the President. See, it's very important for us to understand what has been mentioned under Article 270 of the Constitution. See, if you look at Article 268, 269 and 269A, these are the three articles which explicitly mentions those taxes which are levied by the union and collected by the states. Some of them are levied by the union, collected by the states, but are given to the states. And some taxes, that is under Article 269A, which talks about GST, interstate, GST, these are collected by the union, levied by the union, but distributed between the union and the states. And how it is distributed? By a law made by the Parliament on the recommendation of the GST Council. Understood this idea? So all those laws or all those taxes that are mentioned under Article 268, the taxes that are mentioned under Article 269 and the taxes that are mentioned under Article 270 of the Constitution, these are the taxes for which the Constitution explicitly provides that under Article 268 and Article 269, it is the union who will levy those taxes, and these taxes are given to the states. Union does not keep those money. No, whatever is collected out of Article 268 and Article 269, union does not keep it, it gives it to the states. Okay? Whatever is being collected, it is automatically it is given to the states. So it does not form the part of consolidated fund of India. Now Article 269A, what does it say? It deals with interstate trade and commerce and the GST that is imposed on interstate trade and commerce. And Article 269A says what? It says that whatever taxes are collected on this interstate trade and commerce, it is distributed between the center and the state. How is it distributed? On the recommendation of the GST Council. Clear? Now, Article 271 of the Constitution, which we are about to deal with, Article 271 of the Constitution mentions about two of those taxes called as surcharge and cess. What is surcharge and cess? This is also something you should know. Surcharge and cess, as the name suggests, surcharge, which means tax over tax. Tax over tax. So in certain cases, on certain items, what the union does is imposes something called as surcharge or cess. Cess is also a tax over tax. The difference between surcharge and cess is what? Cess is for a specific purpose. See, you have written this. Cess is for a specific purpose. Surcharge is not for a specific purpose. Like the financial year ends in 31st March. No, 1st of April to 31st March is the financial year of our country. As soon as the financial year ends, we tend to start doing what? We start filing our income tax. Once we, if you see, if you have ever filed for that income tax, or if you see the income, the elaborate income tax return that is issued by whom? Not by the, once you send that return, what is the process? Once you file for that return, so either you verify it through something called as the e-network. So if you have an Aadhaar card and it is real, it is there is a phone number that you have that is registered. As soon as you file for it and mention your Aadhaar card, you get an OTP. And as soon as you mention the OTP here, it is considered that your income tax is filed. Otherwise, if you don't send it through that, you have to send it through a registered post, through post to where? To Bangalore. And there is an income tax office there. And all this process has to take place within 120 days of you filing for that particular tax. After it has been received by the concerned government, you will find that you are either mailed or you get an email, in which you get a copy of the income tax return that you have filed. It is a detailed copy. in that whatever your taxable amount is, there is a 3% education cess that is added. See, what is the nature? Education cess. What is the difference between surcharge and cess? Surcharge is also a tax on tax, so is cess. Cess is also a tax on tax. What is the difference? Surcharge is for general purpose. That is, the money that is collected through surcharge can be used anywhere. But the money that is collected through cess is for a specific purpose. It is used only for that purpose. So that 3% cess that is there, as you can see, it mentions education cess. So that is basically used for what? That is basically used for education. So we know there is something called as Sarv Shiksha Abhiyan that the government has actually come out with. The money is used for that. Sarv Shiksha Abhiyan. Clear? The difference is clear. What is surcharge? Tax on tax used for general purpose. What is cess? Tax on tax used for a specific purpose. This surcharge and cess is not shared by the center. If you look at this surcharge and cess, we are going to deal with it in Article 271. Surcharge and cess levied by the union, collected by the union, becomes the part of consolidated fund of India, not the consolidated fund of state. It is not shared by the union. Clear? So Article 268, Article 269, Article 269A and Article 271. In all these 4 articles, what is the tax and how it is to be distributed is dealt with in the constitution itself. Constitution ही हमें बताता है that this is either it goes to the center or it goes to the state. Article 270 says any other tax, leaving this aside, 268, 269, 269A and 271, leave the taxes that are mentioned here, and if you leave it, then all the other taxes that are mentioned in the union list, they are levied by the union, collected by the union, but they are distributed between the union and states. That is, levied by the union, collected by the union, distributed between the union and states. Now, how is this distribution to be done? On the recommendation of the Finance Commission, a body that has been mentioned under Article 280 of the Constitution. I am coming to this body. If we have the opportunity today, I will be discussing this body as well. Clear? This is called as divisible pool of taxes. This is called as divisible pool of taxes, where you have written Article 270. Remember that Article 270 of the Constitution talks about number of taxes. These taxes are called as divisible pool of taxes. These taxes are called as divisible pool of taxes. Sometimes what we do, I have seen, while you tend to write answers on center-state financial relation, you tend to confuse this idea. Whenever we talk about taxes, all these taxes are not the part of divisible pool of taxes. All the taxes are not shared by the center and state. There are only some taxes that are shared by the center and state. These taxes which are shared by the center and the state on the recommendation of Finance Commission, these taxes are called as divisible pool of taxes. So what does the Finance Commission does? Finance Commission is formed under Article 280 by the President of India every 5 years or earlier if the President feels that it is necessary. The President does what? The President gives the Finance Commission a number of terms of references. And the Finance Commission has the duty to recommend to the President of India as to what are the steps that should be taken with respect to proper finances. And while coming out with such recommendations, the Finance Commission does what? The Finance Commission also recommends the principles on which the center-state financial relation is to work, which means the principles on which this divisible pool of taxes that are there, how the money is to be distributed. So, first, the Finance Commission, like if I go to the 14th Finance Commission, what does the 14th Finance Commission say? Out of the total divisible pool of taxes, 42% should be allocated to the states. Matlab, whatever money is there through the divisible pool of taxes, not through through 268, 269, 269A and 271. No, they are not the part of divisible pool of taxes. So those taxes that are left, they are part of Article 270, they become the part of divisible pool of taxes. Now this divisible pool of taxes that are there, how it is to be distributed between the center and the state? So the Finance Commission, 14th Finance Commission said 42% of it should be given to the state. So if there are 100 crores that is collected, so 42 crores will be given to the states. Clear? But how 42 crores are to be given? You cannot, divide it by number of state. Okay, 42 crores, there are 28 states, divided by 28, whatever number you get, allocate every state with that. No, because if you give every state the same amount, it will not be a rational way to do it. You state of UP, 20 crore population. On the other hand, state of Sikkim, 20 lakh population. How can you distribute the same amount of money to both the states? That will not happen. So what happens is the Finance Commission comes out with a formula which we call as principles. Constitutional language is principles. Otherwise it is called as a formula through which this 42%, when you are distributing this 42% to the states, what formula you are going to follow. Like the 14th Finance Commission said, it came out with some criterias and allocated percentage, like 1%, one of that criteria was income gap. It was allocated 50%. So those states which are they are economically more empowered, more developed, they will get less money. And those states which require more money, they are economically not that empowered, they are to get more money. And 50% of the weightage while calculating it is to be given to income gap. Then there is something called as demographic dividend. There is something called as forest cover. What is the forest cover in the state? This was included for the first time by the 14th Finance Commission. Similarly, area, 7.5%. Something like this. They come out with a formula that, okay, because we cannot allocate the same amount of money to all the states, so there is a formula that it derives, and on the basis of that formula, we tend to come out with what state is to get what amount of money. Clear? It is done under Article 270 of the Constitution. Now, because GST and you can see some of the indirect taxes have been kept outside. Cess, surcharge, all of these are indirect taxes. So you can see that Article 268, Article 269, 269A and Article 271, these deals with generally the indirect taxes. Which means when it comes to Article 270, when we talk about this divisible pool of taxes, what are those taxes which are part of this divisible pool of taxes? It is mainly the direct taxes. So when we say income tax, or when we talk about something called as corporation tax, you must have heard about it, corporation tax. Now in India, the largest sum of money as taxes that are collected, it is not collected from income tax, it is collected from corporation tax. It is collected from corporation tax. So whatever money comes here, how it is to be distributed among the center and the state, it is to, it is recommended by the Finance Commission, and accordingly it is done. Understood this idea? Understood what is Article 270 of the Constitution? Next, Article 271. Surcharge on certain duties and taxes, for purposes of the Union. Such surcharge on duties become the part of Consolidated Fund of India. That is, it is not shared by the Union. Clear? Next, Article 275. See, we jump directly to Article 275 because Article 272, 3 and 4, they are not that important. Clear? Article 272 has been repealed. Article 273 and 274 are not that important. Next, Article 275. It deals with the grants. From the Union to certain states. Such grants are given to such states by the Parliament through a law which is charged on the Consolidated Fund of India. We already have discussed what is charged expenditures. What are charged expenditures? Voting cannot be done. It is debated, discussed, but not voted upon by the Parliament. Clear? In brackets here, write statutory grants. See, statutory grants. The term statutory means legal. Through a law. You can see Parliament through a law. Because Parliament is giving it through a law, that is the reason why this is called as statutory grants. Clear? Grants are of two types. Statutory or legal grants or discretionary grants. Statutory or legal grants are given by the Parliament, whereas the discretionary grants are given by the Ministry of Finance. The discretionary grants are given by Ministry of Finance. It has nothing to do with the Finance Commission. And it is solely up to the finance ministry to whom or which state the finance ministry wants to give these grants. Clear? If you see the logic behind statutory grants, it is also derived from Finance Commission. So when you read the recommendations of Finance Commission, the recommendations of 15th Finance Commission are due. Most probably in a 3 or 4 month time you get recommendations of 15th Finance Commission. So when you read the recommendations of Finance Commission, you will find that the Finance Commission, to achieve a certain goal, recommends that these states should be given certain grants. When the president gets the recommendation of Finance Commission, and when the recommendations are placed on both the houses of the Parliament, what does the Government of India do? It is up to the Government of India whether to accept or reject the recommendations. So when the government accepts the recommendations of Finance Commission, what it does is it also gives those states grants that has been recommended by the Finance Commission. And how does those grants are given to these states? By or under Article 275. They are given under Article 275. Clear? See, like I'll give you an example. An example of it is, suppose now we find that okay, there are certain steps that needs to be taken for agriculture, because in India agriculture sector is not doing well. So if the government decides to take up this particular step, it has recommended, okay, with respect to agriculture or any such thing, please recommend, given recommendation to Finance Commission, please recommend what are the steps that we need to take. The Finance Commission recommends that there are some states like the state of suppose Bihar, the state of Jharkhand, the state of Odisha, or the state of West Bengal. These states receive monsoon, and hence you can think about something called as the second green revolution in this particular state. So they form a particular policy that okay, we are going to use drip system and all these things. So to implement that, these states will require finance. पैसे की जरूरत पड़ेगी. Now it cannot be done by the state finances. The state will say, why will I listen to you? Now why will I spend in these things? I will spend into providing TV and laptop to people. This is what the state will do, because that is more populist in nature. So when they provide TV or laptop, people are likely to vote for them. So they are not going to take up steps like implementing drip system or something like that. What they are going to do is they are going to follow populist measures. So to ensure that these policies, these steps that have been recommended by the Finance Commission are followed, what will the union do? Union will give some additional grants to these states. And how will the union give that grants? Under Article 275 of the Constitution. Understood this idea? What is statutory grants? There are also something called as discretionary grants. It is completely, discretionary grants are completely up to the union government, that is Ministry of Finance. But what is it, how it was used, I am just coming to it. Clear? Article 275, understood this? Next, Article 279A. Yes.
Can the states still use it for some other purpose?
No.
Because they will be bound to use it.
Yes, obviously when the state has been given specifically for that purpose, so it will be used for that purpose itself. Otherwise, what will happen? Otherwise, there is an office called as Comptroller and Auditor General. It is responsible for taking auditing. It will recommend the union that, see, in these cases, we found irregularities with how the money was being used. So the purpose for which it was allocated, it was not used for that particular purpose. So the center will have the center has absolute discretion with respect to these grants that are given. The center may say, because you have not used for it, so it will lapse, you have to return it back, or something like this. Any such steps can be taken up. Or if there is a case of corruption, it will be highlighted, people will vote the political party out of power. All these things are there. So it will be used for the same purpose for which it has been given by the union. Clear? Next, Article 279A, the most important article here. It deals with the GST Council. The GST Council. Now, it has been introduced, you can write this, introduced by the 101st Constitutional Amendment. It has been introduced by the 101st Constitutional Amendment, 101st Constitutional Amendment in 2016. Under this article, under this provision, the President will form a council within 60 days of the commencement of the constitutional amendment, underline the President and 60 days. Now, after this, write composition, in brackets mention Article 279A clause 2, 279 clause 2. It deals with the composition. What will be the composition? First, the Union Finance Minister, chairperson, he'll be the chairperson. Second, the Union Minister of State for revenue or finance, as member. And third, the Minister in charge of finance, or taxation, or any other minister nominated by the state government, as members. So the Union Finance Minister is the chairman, and then there are other members. First, the Union Minister of State, who is there for revenue or finance, he is also the member. And also there are all the other states. For all the other states, either the finance minister or the minister who is responsible for taxation, or any other minister who is nominated by the state government to represent the state in the council. So these are the members of the GST council. Clear? These are the members of the GST council. Clear? So 28 states and 2 members from the union. So 28 states will have 1 member each, and there will be 2 members who will be there from the union. So in total there will be right now 30 members to the GST council. Clear? Now in the next paragraph here, write, the members of the GST council belonging from the states shall choose one amongst themselves to be the vice chairperson. In brackets write Article 279A clause 3. 279A clause 3. Who is the vice chairperson? He will be from amongst the members of the states. All the members that are there, so all the ministers that are there from the states, they will choose among themselves one individual who will become the vice chairperson of the GST council. Clear? Vice chairperson of the GST council. Clear? Absolutely clear? Next. Article 279A clause 4 provides that the GST council will have the duty to make recommendations to the union and state with regards to the GST. So anything with respect to GST, whether it is about imposition of taxes, whether it is about exemption, any of such thing that is there, it is to be recommended upon by the GST council. It is to be recommended upon by the GST council. Clear? Next, under Article 279A clause 5, under Article 279A clause 5, the GST council shall recommend the date on which the goods and services the goods and service tax will be levied on petroleum crude oil, comma, high speed diesel, comma, petrol, comma, natural gas, and aviation fuel. See, this is a very interesting. This is a very interesting clause. Right now, all the things that you have just mentioned, they are exempted from GST. So when it comes to petrol, diesel, or for that matter, aviation fuel, for all these purposes, natural gases, GST has right now not been imposed on it. Why? Because when this deliberation was going on the GST Council, formation of GST Council and imposition of GST, so the states had one primary concern, that was that this is the main source of their income. Whatever money the states get, basically in terms of the taxes that they have, this is the sales tax or the indirect tax that they impose on this is the main source of their income. So most of the states, they said, if you are going to include these ideas in the GST, we are not going to agree to implementation of GST. So that they are satisfied, specifically this concession was made and there was a date decided that we are going to review it after 5 years. So since 2016 to next 5 years that are there, so in 2021, after 2021, there will be a review of GST, and accordingly, whatever, should these provisions be included or not, it was to be seen. And who has the responsibility for recommendation? The responsibility for recommendation here lies with the GST Council, that the Council will recommend, and if they recommend okay, there should be an inclusion, so the constitution will then be amended and this will be excluded from here and will be included under GST. Which means whenever we will decide to include this, it will require a constitutional amendment, which means it will not be that easy, because we know constitutional amendment, Article 368, and how constitution is amended by a special majority, because it concerns the state. So an additional phenomena that we discussed, more than 50% of the states ratifying it. Clear? So this has been included as a part of the Article 279A. Clear? Next. Article 279A Clause 7. Clause 7. It states 1/2 of the total number of members, 1/2 of the total number of members of the GST Council shall constitute the quorum of its meeting. Constitute the quorum of its meeting. What is the meaning of this quorum? Minimum necessary for holding the meeting. When you say 10%, it was for legislature, not for GST Council. GST Council has 50%. If 50% of the members are not present, in that case, a meeting cannot be held. Clear? Next. Article 279A Clause 8. 279A Clause 8. It states, the GST Council shall determine the GST Council shall determine the procedure in the performance of its functions, the procedure in the performance of its functions. Next, clause 9, 279A clause 9. Every decision of the GST Council shall be taken at a meeting. Every decision of the GST Council shall be taken at a meeting by a majority of not less than 3/4 of the value of votes of the members present and voting, Accordingly, the value of votes allocated are the central government has a total value of one third of the total votes of the total value of votes, and the state governments together shall have 2/3 of the total value of votes. 2/3 of the total value of votes. Clear? Underline 1/3, underline 2/3, and underline 3/4. Underline 3/4. Next, 279A clause 11. The GST Council shall establish a mechanism. The GST Council shall establish a mechanism to adjudicate any dispute arising out of the recommendations of the council. This is what Article 279A is all about. See, I have dealt with all the major provisions that you should be aware of. Now, this is also, obviously we are going to come to, after this we are going to also come to Article 280 of the Constitution, which deals with Finance Commission. But before we come into that, before we discuss the Finance Commission, as I said, we are also going to discuss this constitutional provision. We are already discussed this. We have also discussed the GST and the GST Council. Now we come to this aspect, that is problems. First, we look at an overall aspect of it. We'll be discussing an overall aspect of the problems between center and state financial relations, and then finally we are going to come to the GST and what is the problem with GST. We are going to look into that. See, for those who are physically present, for you specifically, what I am trying to say from now onwards, you are not going to get that in any book. Clear? It is a result of you going through newspapers, etc. Only then you are going to decipher these ideas. So please, whatever I am telling, be very careful, listen to it very carefully. Otherwise, it will be very difficult for you to understand these ideas. When we look at the overall relationship between the center and the state, yesterday when we completed our discussion on legislative and administrative relations, what did I say? I said that over a 70-year period, there has been rationalization of the unitary tilt that was there. And so if we look at it from today, in the today's context, you will find that the center does not use the constitutional provisions in any manner to do what? To impose its authority on the states. And that is the reason why, despite the constitution does not prescribe for it, but today if you look at the center state legislative and administrative relations, it is an ideal federal manner. It is implemented in an ideal federal manner. There is no violation that is done by the union government, despite the fact that it is allowed, and that is the constitutional provisions. We have yesterday discussed Article 256, 257, 339, 350. We have also seen Article 355, 365 of the Constitution, and you know what I am trying to say. That if you look at the constitutional provisions dictate that the union or the union government is going to direct the states, and the states do not have any authority to contradict the directions given by the union, because under Article 365 it will be considered as the breakdown of constitutional machinery, and under Article 356 the President will impose state emergency. But if you look at the legislative and administrative relationship that exists, it is more or less rationalized. So the union provides sufficient autonomy to the states when it comes to legislative and administrative matters. Sufficient autonomy is given to the states. However, when we talk about the financial relationship, not only is the tilt very much visible, it goes to an extent wherein in financial relationship, if I say that in financial relations in India, what we have is a unitary setup, not a federal setup. I'll say it is a unitary setup, and to a large extent, to a very large extent, I will be correct, because this division of powers that we see between the center and the state, it is not present, or it is not as present as legislative and administrative powers. Why? Because yes, the Constitution talks about certain taxes that are given to the states. The Constitution mentions Article 268, Article 269, Article 269A. All these things we have already seen. So yes, the Constitution mentions that. Yes, the Constitution talks about the Finance Commission under Article 280, and it says that when it comes to Article 270, the distribution of taxes that is there, it is up to the Finance Commission, and the Finance Commission gives its recommendations accordingly. And based on those recommendations, what happens is that there is division of revenue between the center and the states. But if you look at the Constitution, and if you look at the union list, state list and concurrent list, the states have a number of problems with this current situation. More with the coming up of GST. How? Let's look at that. First, here give a subheading, right? Problems of the states. Problems of the states. First problem. Centrally sponsored schemes. Centrally sponsored schemes. Centrally sponsored schemes. What are centrally sponsored schemes? Centrally sponsored schemes are those schemes which are on which decisions to implement them and come out with those schemes are taken by the union government. जैसे आपने नाम सुना होगा, when we talk about schemes such as Manrega, schemes such as Ujjwala scheme, that LPG scheme that is there, or schemes such as Beti Bachao Beti Padhao, schemes, all these schemes that you generally hear of, the most important schemes that you generally hear of, these schemes are centrally sponsored schemes. So the question is, what is the problem that the state has? There are three problems that the state has. First, decisions to implement decisions with respect to the schemes are taken up solely by the central government without any involvement of the states. Write this. First problem. Decisions are taken by the center without involving the states. Decisions are taken by the center without involving the states. So you will say, sir, if the center, we have a government there, so center decides, what is the problem with that? The problem is when we look at the second aspect of it. What is the second problem? The second problem is that, right, the states to implement such schemes have to invest or finance a certain part of it, which are seen by them as a financial burden on the states, So what is the problem? The problem is that when we say centrally sponsored schemes, it does not mean that these schemes are 100% financed by the center. Some of them are, like when we talk about Manrega. Manrega is a scheme that is 100% financed by the center. But not all such schemes are 100% financed by the center. Some schemes have 50-50, some schemes 60-40, and some schemes that are there for some states, it is 80-20 or 90-10. That means if we talk about an 80-20 and 90-10, who are the states? Those states which are the northeastern states or the states of Jammu and Kashmir, now no more are states, so leave that. So the states of Uttarakhand and Himachal. The states of Uttarakhand, Himachal and the 8 states that are there in the northeast, including Sikkim, these are the states which have to provide as low as 10% or 20% of the contribution to implement the scheme, and 80 or 90% of the contribution comes from the center. But other states, for the other states, either they have to finance it 50%, which means 50-50, or for that matter, some schemes are financed in 60-40 ratio, which means 40% of the contribution comes from the states. Clear? So when it comes to these schemes that are there, what are the problems with centrally sponsored scheme? The problem is, first of all, who takes the decision? The decision is taken by the central government. But if the central government takes decision, what is the problem with it? The problem is that the center is deciding as to how the states have to take up expenditure of their finances. आप पैसा कैसे खर्च करोगे? That is also being dictated by the center. Third, the political mileage of such schemes are used by the center, which means when it comes to implementation of these schemes, the states are financing them, either 40%, 50%, whatever, the states are financing such schemes. But who gets the political mileage? The central government. So if anyone is, when people are asked, अच्छा आपके घर पे गैस चूल्हा किसने दिया? मोदी जी ने दिया है. What happens to the political mileage? The political mileage is reaped by the center, not by the states. Though yes, Ujjwala scheme is also a 100% centrally sponsored scheme. So in that case, it is correct also. But in other cases, there are number of schemes that are being implemented by the states, which are being financed by the states. Which are being financed by the states, 40 or 50% of it. But who gets the political mileage? The center. Even when it comes to advertisement, advertisement that is done on those schemes. So advertisement is done in the name of the central government. So it is always the prime minister who is standing like this. So who gets the political mileage of that scheme? The political mileage of the scheme is given to the center, not to the states. So what is the problem with centrally sponsored schemes? The problem with centrally sponsored schemes are that, first of all, the decisions are taken by the center, the states are not involved there. Second of all, the states have to invest some money there, which is a financial burden. The states as it is claim, हमारे पास पैसा नहीं है. So there is a financial burden that is there. And thirdly, when it comes to political mileage, that they should also get benefits if they are implementing them, though. So the other political parties that are there in the states, they are also they should also get an opportunity to claim it. But what happens is that this political mileage is not reaped by the state government, it is given to the center. And hence this centrally sponsored scheme is a problem between the center and the state when it comes to financial relation, because you can see financial burden aspect is there. And if we go back to the last 7 years, that means just go back last 7 years. Now let us look at how many schemes were there. Just a data. There were 128 schemes that were the part of centrally sponsored schemes. 128 schemes, which was later on, it was cut by half when the BJP government came and the Niti Aayog was formed. So one of the very first committees that was formed in the Niti Aayog, they actually took up this matter, centrally sponsored schemes, and they recommended that there is something to be done with centrally sponsored schemes because it imposes financial burden on the states. And they recommended that first of all we should cut the schemes into half. At least 50% of the schemes should be done away with. And the remaining schemes that are there, they should be classified into two: core schemes and optional schemes. And these core schemes that are there, these should be implemented. In fact, they further classified core schemes into two, called as core of core schemes and core schemes. So all those schemes which are for the welfare of the backward section, so scheduled caste, scheduled tribe, women, OBC, all these schemes were the part of core schemes. Some other schemes were given the part of core schemes, and there was a third category called as optional schemes. And as the name suggests, these schemes were optional for the states to implement. This was one of the steps that was taken by the Niti Aayog. They recommended the chief ministers of various states who were the part of these committees, they recommended this, and the union government accepted it. The union government accepted it. Hence, if you go back to the pre-NDA government and the post-NDA government era, you will find that there has been a major reduction in the centrally sponsored schemes. Major reduction in the centrally sponsored schemes. However, there is still a category called as core schemes, which means the states can do nothing about it. They have to implement it. The choice comes only when there is something called as optional schemes. But most of the schemes, because it is welfare in nature, it falls under core schemes. So despite some rationalization that has been brought up, but still that problem of financial burden, it still continues. And the states say that, it is a financial burden as it is, they say that as it is we don't have money. And now you are additionally giving us this burden to implement the centrally sponsored schemes. What is the result of it? The result of it is you will find that in most of the centrally sponsored schemes that are there, it is not properly implemented. It is not properly implemented. Why? Because the states, they claim they do not have money. To a certain extent, this is also correct also, that state does not have the money to implement such a scheme, because they have to implement their own welfare schemes as well. They cannot just implement the state, the union and the centrally sponsored scheme without taking up their own schemes. क्योंकि उनको भी तो अपना नाम चाहिए. So that will also be done, because they see they are all political parties. They have to return back to power after 5 years. That is the ultimate aim that they have. So when the Prime Minister comes out with Prime Minister Kisan Yojana, so the Chief Minister will also come out with the Chief Minister Kisan Yojana. And both of them are being financed by the states. There is a financial burden that is imposed on them. Clear? Centrally sponsored schemes. There are, at least in an year, you get at least 10 articles on this centrally sponsored schemes and the problem that is there. Because you tend to read the Hindu, and Hindu sees problem in everything. So centrally sponsored schemes, you will find that there will be a number of articles that they will come out with respect to centrally sponsored schemes and what is its consequences in the center-state relations. They tend to quote very good data. No, they tend to quote some data. So you can use it for your examination purposes. Whenever you get an article, remember this and just add the data here. Clear? Second problem. Nature of taxes. Nature of taxes. Now, what is the problem with nature of taxes? Write this. The states claim that the taxes that are allocated to the states, do not have elasticity. What is meant by elasticity? It means flexibility. What does this mean? It means that if you see the nature of taxes that are there with the states and the nature of taxes that are there with the center, the kind of taxes that the center has, they are more elastic in nature. That means they can be extended more. They are more flexible. That is not the case when it comes to the state taxes. What does the states claim? The states taxes, they claim that these taxes are, most of the taxes that we have, these taxes are very, very less elastic, which means if today, that means if suppose in 2020, so the 19-20 financial year it is going to be over. States claim that these taxes that we have, the taxes that we can impose, now these taxes, the collection of these taxes do not differ drastically when it comes to subsequent years. India being a developing country, it means that every subsequent year, because of the demographic dividend that we have, and also because the growth in our GDP that is there, that leads, that does what? It leads to number of individuals who are being added to the, what you can say, the worker pool, and hence the taxes that are there, it should grow. There should be a growth in taxes. That means if this tax collects, suppose 100 crores this year, so next year there should be a substantial increase in it. that is, it should be 110 crores, 115 crores, something like that. The states argue that this elasticity is not present with the nature of our taxes. On the other hand, they also claim that not only we do not have elastic taxes, but our developmental responsibilities are growing day by day. So on one hand, developmental responsibilities are growing. On the other hand, there is what? On the other hand, there is the taxes that are available, the finances that are available to them, that is not growing. Which means they have to take up more policies, programs to ensure that they answer to those what you can say developmental responsibilities. But that is not what is happening, because they do not have enough money to spend on those developmental responsibilities. So they claim that the taxes that we have, they are not elastic enough. They are not elastic enough. Example, surcharge and cess, right? We have just discussed 271. It talks about surcharge and cess. Now, who has the responsibility to impose surcharge and cess? Center. Does center share these taxes with the states? The center does not share this tax with the state. Now, surcharge, where is it imposed? Surcharge. Surcharge and cess is generally imposed on certain like luxury items or something like that. It's not imposed everywhere. It's imposed on only such things. Now, because we have a developing country, because the demographic dividend, almost every year lakhs and lakhs of individuals are graduating from colleges, various colleges, and they are entering that worker pool. So if they are placed, etc., what do they happen? They tend to spend this money in this nature. So they will buy they will buy what? They will buy an expensive phone. उस पर surcharge लग रहा है. Why? Because luxury tax. It's a luxury item. They will buy vehicles. Generally, you will find every year so much increase in the number of vehicles that are sold. So again surcharge is being collected where? On the fuel that is being the fuel charges that are there, surcharge is present there, cess is present there. Similarly, income tax that you are submitting, again cess is being applicable there. Or for that matter, if you go to restaurants, etc., now it is under GST, but it was previously under cess and surcharge. It was being implemented there as well. So nature of taxes that are there, they are not elastic enough. Not only they have a problem with the nature of this less elasticity that is there, they also claim that most of the taxes that are mentioned in the state list, they are obsolete in nature. They are obsolete in nature. You can write this within nature of taxes itself. The second point, most of the taxes under the state list are either obsolete or has not been imposed. Obsolete tax, I'll give you an example of it. Article 276 of the Constitution talks about a tax called as professional tax. Professional tax, that means any individual who is a professional, he has to pay that particular tax. What is the maximum amount of professional tax annually? 2,500. You have to pay an annual tax of 2,500. That is a maximum tax that is mentioned under professional tax. First of all, most of the states do not impose it. When the states do not impose it, a government cannot start imposing a new tax, because that is not a populist measure. अरे 1 रुपए भी मैं फालतू क्यों दूंगा? 2,500 रुपए तो दूर की बात है. First of all, why will I do that? And if someone is forcing me to pay 2,500, what will I do? I will vote for some other political party. It is not a populist measure to impose taxes. It is never considered to be a populist measure to impose taxes, and that is the reason why when our prime minister does this, ठीक है, तो पहले पूरा माहौल बनाते हैं. What does he do? First of all, he says दैट आपको क्या लगता है लोगों का, फार्मर्स का भला होना चाहिए या नहीं होना चाहिए? तो लोग बोलते हैं हाँ होना चाहिए, फिर बोलते हैं ठीक है चलो ये जो किसान के लिए ये टैक्स आपको भरना पड़ेगा। See, this is what happens because taxation, imposing taxes are not a populist idea. They are not populist measures. So most of the taxes that are mentioned in the state list are either as absolute as something called as professional tax, which has 2500. एक तो ये अमाउंट ही कुछ नहीं है, सो एक तो पैसे भी लो दूसरे से गाली भी सुनो, इससे अच्छा ये है कि टैक्स इंपोज मत करो, यही करते हैं। So rather than imposing taxes, what they will do is, see what will be the amount that will be collected. Okay, 5-10 crores are collected from that amount. What will the state government get out of it? Nothing. The state government cannot implement a program out of that much money, 5 or 10 crores. So what they do is they do not impose such taxes. So either they are obsolete or they are not being imposed. Because they have not been imposed, so no subsequent government do not come and start imposing taxes. Because of, see, the nature of our economic system. See, go back previously, before 1990s, it was a state-run economy, and because we used to do what? We were not financially very prudent. So there were deficits, deficits of state government, budgetary deficits of state government it was running up to 12 or 13% of the state GDP, which is absolutely, मतलब 5 साल में crisis में चले जाओगे. But फिर भी they were very happy. Why? Because they were being financed by the center. The center grants दे रहे हैं, उनके पास चले जाते, please दे दो. तो they were giving grants, etc., etc. So they were not imposing taxes. क्यों impose करे when it is being financed by the center? But post 1991, what happened? Post 1991, with the adoption of LPG, now with the adoption of LPG, the prudency, the economic prudency was being adopted by the center, and this was a particular environment wherein states could not go for new taxes. Because as it is, people are losing jobs, etc., etc. So they cannot go for new taxes. They did not impose new taxes then. Then in 2005, what happened? You must have heard about something called as FRBM Act. Have you heard about it? FRBM, Fiscal Responsibility and Budgetary Practices Management Act. FRBM was something that was imposed in 2005. Since 2005, the center again started doing this, observing financial prudence. So, मनमोहन सिंह वो प्राइम मिनिस्टर बन गए, तो उन्होंने ही वही 1991 वाला पॉलिसी था, उन्हीं का था, उन्होंने बोला और फाइनेंशियल प्रूडेंस होना चाहिए. सो व्हाट दे डिड वाज दे क्रिएटेड अ टाइमलाइन दैट बाय 2008 आवर फिस्कल डेफिसिट दैट इज देयर, इट शुड नॉट बी बियॉन्ड 3% ऑफ आवर जीडीपी. उन्होंने ये लगा दिया. So the center did what? The center started controlling the grants that they were giving to the states. But states को तो आदत हो गई थी grants लेने की, उसके अलावा उनको कुछ पता ही नहीं था. Now that became a problem. So the nature of taxes that the states have, they complain about the nature of taxes because it is less elastic. It's not that elastic. Second of all, it is either obsolete or it has not been imposed. If it has not been imposed, it cannot be imposed because that will not be a populist measure. So they do not impose it. They do what? They complain with the center. Third, the center providing grants to the states rather than allocating taxes. This is also a problem because grants are completely up to the discretion of the union government. So if this year you get a grant of suppose 10,000 crores, it is not something that will be given maybe next year. But if you are allocated taxes, that becomes like a permanent income. That okay, once you give me taxes, I will impose that taxes, I will collect those taxes and I'll keep the money with me. Now in that case, it becomes like a permanent, it is like a permanent structure, a permanent idea. But when the center gives grants or grants are given by on the recommendation of Finance Commission, they are not permanent things. They are revised every 4 years, every 5 years, they are revised. And even sometimes it so happens that if the government changes, that also leads to effect in grants. Example, Planning Commission. I said Planning Commission was responsible for discretionary grants. Now, who was the chairman of Planning Commission? The Prime Minister. What was the role and responsibility of Planning Commission? To first of all see what are the resources India has and accordingly come out with plans to achieve some goals with respect to economic growth, etc., etc. How was the Planning Commission working? Absolute centralization, no participation from the states. It was an absolutely centralized body. There was no participation from the states. So they were the ones who were coming out with what are the contemplating the resources of India and accordingly providing grants to achieve those targets that were mentioned in the 5-year plans. Now this became a political body. Why? Because obviously the body was completely at the disposal of the Prime Minister of India. So the Prime Minister was the ex officio chairman. Whoever he wanted, he would appoint as the deputy chairman of it, and accordingly it was basically used. So any political party, okay, in this state which political party? Congress. Center में कौन सी है? Congress. Okay, give them good grants. Okay, center में कांग्रेस है, अंदर क्या है? बीजेपी है, तो ग्रांट छीन लो. Political vendetta. How Planning Commission was basically being also used, and Planning Commission was responsible for providing 55% of the total discretionary grants in 2014 when it was done away with. Going before 1991, it provided discretionary grants. 90% of discretionary grants were given on the recommendation of Planning Commission. So when we talk about grants, there is a problem. Grants you can take away at any given moment. I'll give you an example of it. As soon as the recommendation of 14th Finance Commission was implemented and the 14th Finance Commission said that 42% of the money should be given to the states, and they did not recommend on that special category status. Yesterday we did discuss that special category status idea. They did away with that special category status idea. So if you compare the budget of 2015-16 and the budget of 2014-15, you will find that in the budget of 2014-15, the total grants that were given to these special category states was 45,000 crores. In 2015-16, what was the grant that was given to these special category states? 1800 crores. Gap dekh rahe ho? 1 year. In 1 year, these grants which were being given by the center, it was taken away by the center. It is completely up to the center. So the states claim, we do not want grants, we want taxes. You should give us taxes, don't give us grants. Clear? Next point. No, separately. The states have previously also complained of the center not sharing elastic taxes such as surcharge and cess. Surcharge and cess. I've already discussed this idea. Next, local self-government. Local self-government has been claimed by the states to act as a financial burden on the resources of the states. A financial burden on the resources of the states. This is also the case. The states have to conduct elections of the local bodies. Not only do they have to conduct elections to the local bodies, they also have to provide resources to the local bodies so that they can act as an institution of local self-government. If you look at the constitution, which we are coming to next topic, we are going to take up local self-government itself. You will find how the constitution has visualized these bodies. The constitution has visualized these bodies as as a body of local self-government, which means self means they will be independent. They will be independent. They will not be dependent. They will be independent. But the states claim that because we have to provide, not only do we have to take up implementation of resources and implementations of policies and programs to be done by the state government, we also have to give resources, financial resources to the local bodies, so that these local bodies can act independently. They can take up policies and programs, etc., etc. And they claim that this is also acting as a financial burden on the states. Clear? Next. Some states have a problem with the principles recommended by the Finance Commission, for distribution of revenue between the states. In brackets right here, horizontal distribution. See, there are two types of distribution. Vertical distribution means vertical, so center and state. Horizontal distribution means between the states. Now, what is the problem that these states have? Let's look at that. Some states, like if you look at the southern states, they claim that one of the principles that you have come out with is things such as demographic dividend and population of the state. And population of the state actually carries somewhere around 15% of it. It differs every financial, every finance commission recommendations, but this year I think it was 15% or something like that. The states are claiming that you should, rather than be incentivizing certain actions of the states, you are giving them incentives. Like when the population policy, we have already in the 1970s, 80s, by 1990s, India, we have started a slogan with respect to family planning. ठीक है, हमने एक phrase शुरू किया, हम दो हमारे दो, and we started implementing it. But in certain states such as Bihar, the states such as UP, today if you look at the total fertility rate that is there, that means per family how many kids are born, even today it is as high as 3.8 or something like that, 4. तो हम दो हमारे दो को भी 30 साल हो गए हैं और आज भी वो 4 बच्चों वाला सिस्टम चल रहा है. Why? Rather than creating incentives, disincentives, you are creating incentives for them. Why will they take incentives if why will they take initiatives to reduce the population when you are allocating 15% of the total resources that are to be given to them? So these states fail to act, and they are not wrong here, because why should the states which are doing good work here, why should they be punished? So if you look at the southern states, you will find the fertility rate has decreased there, and it is as low as 2 or 1.8. On the other hand, in India, specifically when it comes to northern and eastern states, so their fertility rate is as high as 4. And they are being incentivized for it. So they have a problem with this. Secondly, see, income gap 50%. So income gap, why are you why are you giving them incentives? So that they are given incentives not to work or not to do good work, rather than adopting economic policies which would allow for better infrastructure, more investments in the states, so that this comes down, so that this particular income gap comes down. Because you are facilitating them and you are giving them more grants on it, they do not take any steps. So some states, like states of Tamil Nadu, states of Gujarat, they are being punished for it. Why? Because they have come out with good and ideal economic policies for their states. So when it comes to the private sector, they are more. Now, as an individual, if suppose I have to establish an industry, I have suppose 100 crores, where will I invest? I will not invest in Northeast, or I will not invest in the states of Bihar. I will go to the state of Gujarat. Why? Because I know that the policies that are there in Gujarat, they are more suitable for me. If I go to the state of Bihar and I start investing 100 crores there, I have to pay 50 crores as bribe. This is something that happens. Why? Because the state government has failed to act. And these states claim that rather than de-incentivizing these ideas, you are incentivizing them. So they also have problems with this very idea. Clear? Understood this? So whenever you get a question on financial relationship, this is a more practical angle to the problems. Yes, there are some constitutional ideas, but just don't literally write what is mentioned in the constitution without looking at it from the practical angle as well. Okay? So we have seen what are the concerns or problems with the state. Now give a subheading here and write concerns of the center. Concerns of the center. First, the center points out to the increasing nature of devolution of taxes. Increasing nature of devolution of taxes. Example, 13th Finance Commission. 13th Finance Commission, it recommended that 32% of the total divisible pool of taxes should be given to the states. The 12th Finance Commission recommended for 27.5%, whereas the 14th Finance Commission recommends 42%, which means in the last, suppose 12th Finance Commission, this 2020, so 14th, it means since 2005 itself, in the coming 15 years, the total taxes that were given to the states, it has increased from 27.5% to 42%. तो उनका तो सबसे पहला आर्ग्यूमेंट ये, दे विल फर्स्ट ऑफ ऑल आर्ग्यू दिस, why should I give you more taxes? I have already been accepting the recommendations of the 14th Finance Commission. So we have been increasingly devolving taxes. The center will claim that we have been increasingly devolving more and more taxes to the states. Second point, out of the total share, the center has around 16% of the expenditure, 16% of the expenditure is taken up on state subjects or state developmental responsibilities. State subjects or state developmental responsibilities. Example, education, health, infrastructure. See, yesterday we saw that education is a part of concurrent list. So there is a common developmental responsibility of both the center and the state. But we have already seen education cess, and where is the money of education cess going? On education, obviously. So the center is implementing the Sarv Shiksha Abhiyan. The center is implementing the Right to Education Act, all these things. Center claims that when it's not only that we are giving you increasingly devolving the total taxes that are there, we also do what? Our share of the money that we have, some part of it is also taken up for developmental responsibilities that also belong to the state. Like when we talk about infrastructure, and yes, the center is responsible for developing national highways. But when we say development of national highways, it does not mean that national highways are being developed exclusive of state highways or rural roads. These are the three categories: national highways, state highways and rural roads. So when suppose this particular, there is a road to be developed. So in this case, in connecting these two areas, what happens is some part of rural road that is there, it is subsumed under the national highway. So when the government, union government is implementing in infrastructure development, that also benefits the states. The center argues that the states do not follow economic prudency, or write it in this manner: prudent economics. Do not follow prudent economics. In brackets mention, when I say prudent economics, what do I mean? Budgetary deficit, comma, fiscal deficit, primary deficit. Center claims total revenue is 1000 crores, you are spending 10,000 crores. So this is not prudent economics. When the center has also, if you go back to the 1980s, if you look at the budgetary deficit or the then fiscal deficit of India and compare the fiscal deficit of India as of today, so it has come down drastically, and we have almost achieved that 3% mark of our GDP. That our fiscal deficit should not it should not violate this 3% mark. Primary deficit, union government has ensured 0% primary deficit, which was previously not the case. It was as high as 8%. But they have ensured fiscal prudence, and because of this particular prudence that is there, the economic prudence that is there, the center government has money. Whereas what does the state do? The state, rather than following prudence, they tend to do what? Laptop बांट देंगे, color TV देंगे. See, these are populist measures, and this does what? It creates an economic burden on the states. And this economic burdens, because of lack of, why does it come up? Because of lack of the budgetary, or for that matter, economic prudence. So if you have only, if you have only 5,000 crores to spend, there is no need to spend 15,000 crores. And also the manner in which you spend it, where are you spending it? That is also something that counts. Rather than taking up welfare activities or socio-economic development activities, you take up populist measures. That is also not good. So center claims that the states do not follow what? Economic prudence. You can add here, just add, the states take up populist measures. The states takes up populist measures. So the states, they have their own angle attached to it. Like, Akhilesh Yadav, this laptop baant denge, I'm not giving you out of the blue. This example was done. It was done something by the UP government when Akhilesh Yadav came to power. In 2011, when he came to power, he actually did this. He gave he actually took up this program wherein he distributed laptops, and out of the, in that program also, see, in that program also, the laptop which cost 20,000 rupees was, no, it was, the budget showed that every laptop that was bought by the government, it was bought at 40,000. मतलब उसमें भी पैसा चुरा लिया आपने. अरे जब पैसा है नहीं तो चोरी क्यों कर रहे हो? तो on one hand you are claiming you don't have money, on the other hand you take up such exercises also. Clear? So that is, the laptop that was sold, not sold, that was given by the government, it cost 20,000 in the market. Right? बहुत लोग तो वेले होते हैं ना, वो यही सब काम करते हैं, कितना होगा इसका दाम. So they saw that configuration etc. and they claimed that it would have cost 20,000 rupees to the government, but in the budget the government showed it cost 40,000. This also happens. Next, the state government also do not adopt measures for administrative efficiency, such as introduction of e-governance. This is also not done. Now, any e-governance initiative that you will find, generally it is taken up by the center, and because it's like it has been forced upon by the states. States do not themselves try and use administrative efficiency by introduction of such things like e-governance. Very recently, I think it was in this month of June or August or June, there was a yojana that came up, in which the yojana was dedicated to this very idea, e-governance. If you have read it, if you have not, you should read it. And in that, the first article was written by the Law Minister Ravi Shankar Prasad. He had written the first article there, and it specifically, the government of India claimed that in the last 4-5 years, because of adoption of e-governance, movement towards Aadhaar, direct benefit transfer, etc., the government has been able to save more than 2 lakh crores, because it was an administrative cost that was involved in implementing the measures that they have taken, but because they have moved towards e-governance, etc., they were able to actually save this kind of money, 2 lakh crores. They were able to save 2 lakh crores. So, in 2017 itself, they claimed that it was 20,000 crores. In 1 year itself, they were able to save more than 20,000 crores. CAG audited that and said it was not 20,000, it was 18,000. But chalo theek hai, kya farak padta? It was near about that particular amount. So when it comes to administrative efficiency, when center has the will to do it, why do not the states adopt it? And generally the states, the programs run by the state and the state administrative machinery that is there, it still faces the problem of inefficiency because lack of adoption of technology, lack of adoption of e-governance, etc. Clear? So these are some points that are the concerns of the center. Clear? So this is when we talk about the center-state financial relations, and center-state financial relations, what are the concerns of the union and what are the concerns of the state. Come to GST. Let's look at the GST Council. Just give this particular subheading, GST, a mechanism of cooperative federalism. This heading, GST, a mechanism of cooperative federalism, or a challenge to fiscal federalism. A challenge to fiscal, not physical, fiscal, F-I-S-C-A-L, fiscal federalism. Fiscal federalism means this, financial distribution of powers. So we have to see this, whether GST, the introduction of GST, whether the introduction of GST can be considered as a challenge to financial federalism in India, or is it a mechanism of cooperative federalism. Let's first discuss it as a challenge, then we'll come to a mechanism of cooperative federalism. Challenge. First point. The states have lost their autonomy. The states have lost their autonomy, or write it in this manner, the states have surrendered their autonomy. The states have surrendered their autonomy with respect to deciding the rates of taxation, to the GST Council, Clear? So previously, when we talk about sales tax, when you actually go through the topic GST in economics, you will get that, initially we started with sales tax, then we moved to something called as VAT regime, and then finally we adopted GST. So if you see the rates of sales tax or VAT, it was basically being decided by the states. States will decide themselves. No interference from the center, or for that matter from any other state. Now what is the case? Who is deciding GST rates? It is the GST Council. You have just seen under Article 279A Clause 4. It is the GST Council which decides, takes up every decision with respect to the GST. So who decides the rate of taxation? It is the GST Council. Previously, it was an autonomous state who was deciding. Now, previously, I was the one who was responsible for taking decision. Now we all are. So if I am the only one, in that case, my decisions will not be the ones which will be implemented. It will be what is decided by the majority. So we have surrendered. The states have surrendered their autonomy in favor of the GST Council. Second, in the GST Council, the central government has an unsaid veto power. Go back to the mechanism and see the value of votes. How is the decision taken? By 3/4 of the majority, which means 75%. At least 75% of the value of votes you should have to take a decision in the GST Council. Now what is the value of votes of all the states combined? It is 67%. Which means if all the states take a particular side, they still will not be able to take a decision in the GST Council until and unless the center agrees to it. 1/3, center has how much value? 1/3. What is 1/3? 33%, something more than that, but 33%. On the other hand, states have 2/3, 67%. What is the minimum required? 3/4, which means 75%. So in this case, if you look at the technicality here, you will find that the center has an unsaid veto that is there in the working of the GST Council. So when the GST Council is taking a decision, it cannot take a decision until unless the center agrees to that decision. What is unitary state? What is the meaning of a unitary state? The decision is taken by whom? Union. And in this case, can the states take a decision autonomously? Is it a challenge to fiscal federalism? Absolutely yes. It is a challenge to fiscal federalism. Third. See, third point, more than to be written, you should understand it first. Let's take an example to understand it. Today, in the union, that is in the central government, we have NDA government which is in place, and NDA government is led by the BJP, and BJP has a right wing economic policy. It is a right wing oriented organization. When I say right wing oriented, in terms of economy, what is the meaning of right wing economic policy? It means more privatization, more liberalization, less and less interference from the government. This is what is meant by a right wing economic policy, and this is what the BJP does. You will find it is taking up disinvestment. Now they say Air India should be disinvested, all these, because this is a policy that they follow. Any right wing economic wing that is there, they will always decide more in favor of privatization, liberalization, etc. Clear? Now, in various states come hai, but there is one or two states wherein there is left parties that are in power, like in the state of Kerala. Currently there is the left party that is in power. Now compare the economic policies of both these. Left parties will have an economic policy of taxing the rich and coming out with various policies and programs for the poor, equity and equality in distribution of wealth. The right wing parties will focus more on liberalization and privatization. So privatization, so they will not give direct employment or direct, like taking up socio-economic policies. They will do what? They will empower the private sector so that they are employed by the private sector, etc., etc. If you see the difference that is there, on one hand, one political party will tax more. On the other hand, the other political party will have an economic policy of either no taxation or less taxation. With the implementation of GST Council, and now the GST Council deciding for it, can they both follow their economic policies separately? Absolutely not. Khatam ho gaya wo. There is, first of all, there is no such thing as in India left parties. वो तो ऐसे ही है. But even if they have that economic policy of more taxation and providing equality and equity in the society, now can they follow that? No. Autonomously they cannot do anything about it. Why? Because they have to be dependent upon the GST Council. Until unless GST Council agrees to that decision, it is the GST Council which will decide what will be the taxation rates. It is not a particular state. It is to be decided by the GST Council. So, because of this, we also see a problem of economic ideologies. The various political parties being voted to power in different states are not able to follow autonomous economic ideologies. Why? Because of the existence of the GST Council. And this is the very idea behind the this federalism idea that is there, autonomy. So I would like, as an individual, if I want, I would like a government to be there in the center. But I do not want the same government to the same political party to come to the state. And I would like another political party, a regional party, to be in power in the state. But the problem is because of the coming up of GST Council and the, what you can say, a unanimous kind of structure that is being imposed on the states, the state political parties that are there, they are not independent and autonomous to follow their own economic policies. They have to be dependent upon the GST Council. Write this. The GST Council has also deprived the states, and the political parties coming to power in the states, of autonomously following an economic ideology. Clear? See, one more thing that you have to see is, on one hand we have seen that it is a challenge because the states have only 67% of the vote. Forget about 67% of the vote. Suppose tomorrow the state of Tamil Nadu wants to take an autonomous decision. It cannot do that. It cannot take that autonomous decision. Why? Forget 67%, because its value of vote will not it will not come anywhere near what is required in the GST Council. So autonomy is completely over. And one more point you can write here. According to Article 279A Clause 11, 279A Clause 11, it is the GST Council. It is the GST Council who themselves will decide a mechanism. Themselves will decide a mechanism to resolve their disputes. That what does this mean? There is no independent mechanism that okay, let's make the Supreme Court the judge of it, or let's come out with a separate autonomous body. It is to be decided by the GST Council themselves. That if suppose this state of, as I said, state of Tamil Nadu, suppose wants to appeal against the decision of the GST Council, so it will go to the authority that has been decided by the GST Council itself. That okay, you go to this authority, or they will say okay, we will only ourselves resolve this dispute. So how will that work? That is in fact, going by the spirit of it, it is a violation of principles of natural justice, because principle of natural justice dictates no one shall be a judge in his own case, and in this case that is what is happening. The GST Council is itself deciding which authority they are going to appeal to. Clear? This is the reason why it is a challenge to fiscal federalism. Clear? This is where I end today. Tomorrow when we meet, the last part of our discussion is left here. That is, why it is an example of fiscal federalism, cooperative federalism. So we will deal with that, and then we will move to the local bodies. With this, we complete our discussion on center-state relations. With tomorrow's somewhere around 10-15 minutes discussion, we complete our discussion on center-state relations. Clear? Not only have we discussed the constitutional angle here, I have gone forward and also discussed the practical and administrative angles to it. Okay? Thank you.